Hi everybody, welcome back to the channel. Today we're back with the Dividend News You Can Use series, a weekly quick hit summary of the market and upcoming dividend news so you can get the info you need and move on with your week. No fluff, just the dividend news you can use in about 10 minutes or less. So let's go. Overall, the market had quite a varied result. When you look at the S&P 500, the Dow, and the NASDAQ, the S&P 500 was flat at 0.3% increase. The NASDAQ was down 1.5%, and the Dow was actually up 1.9%. This is quite the divergence over the last few weeks, where the NASDAQ has taken the lead, but now the Dow has had a much more positive results this week, and you can see the clear diversion that started on Thursday after companies like NVIDIA and Tesla have reported. Notable dividend stocks and funds for this week: SCHD at plus 2.17, DGRO at 2.47%, VYM at 2.76, NOBL at 1.75, and VNQ at 0.06. All had positive weeks, which again shows that the more stable S&P 500 and Dow related companies have done well this week. Some of those in particular is AbbVie at plus 5.68%, Johnson & Johnson at 6.46% on the backs of a positive earnings result. Verizon was down negative 0.38%, which we'll talk about later. JPM at 3.46. Apple and Microsoft were almost flat, with Apple up 0.66 and Microsoft down 0.43. This goes back to the chart we showed of the NASDAQ, where it had a negative week. Normally, Apple and Microsoft would be leading the pack, but again, they had just a flat or down week. Vici I included here because I just got back from Las Vegas, where I visited the Venetian, which is owned by Vici. Is an excellent property, and I love seeing my investments in action. They were up 4.06% for the week. When you're looking at all the different sectors, it shows a similar result, where your high-flying tech names and some of your consumer discretionary names actually had a negative week this week, and your consumer staples, healthcare, and financials all had positive weeks. Real estate was also down a little bit for the week. Even with these results, investor sentiment is still at near all-time highs. Current fear and greed index is at an 82, which is higher than last week and higher than the previous month. It seems to be keep going up. So investors are still very bullish on the overall market. This bullishness has caused market valuations of certain companies to go up, specifically the S&P 500, your large 500 companies in the United States. The forward PE is 19.5 right now. If you look at the mid caps and small caps, you have a much more reasonable valuation at 14.3 and 13.9. So if you're looking for value, you might want to look at your middle and smaller companies at this time. Economic data this week, we really are going to be focused on the FOMC decision on the interest rate policy. They're meeting on Tuesday and Wednesday, and the Fed chair is scheduled to meet on Wednesday afternoon to announce the potential increase in interest rates. The market is expecting a 0.25% increase, which will lead the Fed funds rate to be one of the highest we've had in quite a few years. The market is anticipating this. There's currently about a 99% chance of there being increase. So hopefully the market won't react too negatively, but it does always cause news when they do announce. So we'll see what happens in the market. Additionally, on Thursday, we have the initial jobless claims looking like a plus 236,000 forecast. And the initial advance report of the GDP is scheduled to come out at 1.7% increase for GDP. So we'll have to see on Thursday how that compares to the actual number to see if the market's going to react to that. So some dividend stocks in the news this week. The first one is Johnson & Johnson. As I mentioned earlier, they reported their earnings. But during that earnings announcement, they also announced that they will be launching an exchange of J&J shares for shares of Kenvue. Now, Kenvue is the consumer products division of Johnson & Johnson that recently IPO'd. Currently, J&J owns 90% of those shares, but they're going to be offering it to the public as early as the next couple of days. And this will allow J&J shareholders to exchange all or a portion of their shares for the new Kenvue shares. Additionally, we saw AT&T and Verizon in the news. There was reports on toxic lead cables left over from legacy programs that could be affecting the soil and water around those cables. This negative news and downgrades from the analysts caused AT&T shares to go to a 3-decade low, and Verizon fell to its lowest closing level since 2010 this week as well. So notable earnings. So this past week, earnings season really did start getting kicked off. So we had a few beats and a few misses I wanted to highlight. So Bank of America beat, it was estimated at 84 cents and it came in at 88 cents. Lockheed Martin at 673, the estimate was 643. ASML Holdings reported 5.37 and the estimate was 4.98. IBM came in strong at 2.18 and an estimate was $2. And Johnson & Johnson, as I mentioned before, reported $2.80 and the estimate is $2.61. We also did have some misses this week, as you see below, looking at the financial sector. Goldman Sachs missed their earnings. They reported $3.08, an estimate is $3.25. American Express and Discover, both of the credit card companies that actually hold the credit card loans on their books, they reported missed earnings as well this week. So it's interesting to see how those compare to Visa and MasterCard in the next couple of weeks to see how the different companies in the credit card space are reacting. So this is the real middle of the earnings season right now, this coming week. So we have quite a lot. I highlighted a few here. Too many to list here, but you can see that it's going to be a very busy week. So the market might adjust based on the results of each of these companies. There are quite a lot of large companies that are reporting this week. So we'll take a look to see which ones were notable and talk about it next time. We also saw quite a lot of dividend increases this week with Bank of New York Mellon, Morgan Stanley, Goldman Sachs, and Bank of America all increasing their dividends almost 10% or more. ASML came in super strong at 28.5% increase. Regions Financial with a solid 20% increase. PPG Industries, 4.84% increase. Citigroup at 3.92. Synchrony Financial at 8.7. And State Street came in at 9.52. And rounding it off, Cortiva came in at 6.67% increase. So congratulations to all holders of those dividend companies. You should be expecting higher payouts in the upcoming month or two. Speaking of dividend dates, we have a few that are coming through this week. So if you want to take advantage of the upcoming dividend, you have to own these companies by these dates. So we have Albertsons and Lowe's, Fastenal, Pfizer, Bank of New York Mellon, Enterprise Product Partners, Omega Healthcare, Morgan Stanley, Kinder Morgan, Apple Hospitality, and Bank of America all having ex-dividend dates this week. And last but not least, the undervalued stock of the week I want to talk about today is Target. Everyone should know Target, but they are a discount retailer throughout the United States and some other countries as well. Their current yield is 3.22%, but their 5-year historical average yield is 2.25. Using that calculation, it looks like they're about 43% undervalued at this time. Additionally, the current price is $134.08. Analysts have a 1-year estimate of the price at $173. So this shows a potential upside of 29.35%. So if you're interested in Target as a company, this might be a great time to invest in them, as the valuation seems relatively cheap and something you might be able to take advantage of. So thank you again for watching this weekly update of the dividend news you can use. Please subscribe to the channel if you haven't already, and please like the video and share with your friends. You can also find us on the web at dividendstockpile.com, as well as on social media on Twitter and Threads. Thanks again. Have a great week.